Hello and welcome to Goodreturns. We have today with us Aditya Damani, CEO of Credit Fair. Mr. Damani, warm welcome to you. Thank you for joining us.
Thank you so much, Shruti. Glad to be here.
Let me start by asking the most obvious question that what is probably expected out of this budget? What is your expectation, your thoughts?
Right. So I think the government has been good about balancing fiscal discipline while also focusing on building the nation, right? So there will be, I'm sure, more of a focus on infrastructure, on the employment creation through agricultural sector, maybe some benefits there, and hopefully more divestment as well to kind of generate more revenue for the government. The stock market has been doing very well for the last 1.5 years. So I think that should give a good opportunity to the government to raise more money through divestment, hopefully. And I think for kind of controlling inflation and maybe also balancing that with growth. So we are hoping in terms of fintech and for NBFC sector that there will be some more liquidity enablement by the government. So that would, those are the broad things I would expect. And actually, one more thing I would like to add is on the environment and green energy part. With the Prime Minister announcing the Suryodaya Yojana and trying to solarize 1 crore homes. So would hope to see some more things there as well.
You spoke about green energy and climate change. Now India is expected to meet its net zero target by 2070. That
Yes.
is a little late from what other developed countries are probably aiming. Any
Right.
thoughts on that?
Yeah, so I think India is at a very different stage compared to a developed economy.
Uh,
Our population still has to move up out. I mean, move out of poverty, right? Like a large part of our population, and per capita, our pollution is still not very high. So I think, I mean, we are looking to set maybe more realistic targets for 2070. But I feel the government is trying its best to maybe even prepone the deadline over time because we rely a lot on foreign oil, so it is in our economic as well as social interest to improve the reduce like the pollution and everything that we're doing. So yeah, I feel we are capable of maybe even making it 2050, but yeah, ultimately we don't want to rock the economic boat. Like let's make sure first we get people to a good level and then focus on reducing the pollution as well.
right. Interesting. So let's talk a little bit about the economy before we talk about fintech. Probably,
Sure.
our Prime Minister Narendra Modi has already said that we are going to be the third largest economy in the world. Will be a $5 trillion economy very soon. How do you think the lending platforms will contribute to this growth rate?
Right. So I think in a country like India where there's such a big young population, typically their incomes are not keeping pace with their aspiration. So that's where the need for finance and lending will always be there. We are a consumer and consumption-driven economy, and without having adequate finance, both for consumption as well as for now the capex growth that we're expecting in MSMEs and corporates, there will have to be good flow of credit. Within that, I feel fintechs will contribute obviously a lot more for consumer and for MSME. And I think the focus will be a lot more on MSME sector as well as green energy, like I mentioned, or other priority sector lending. Since the RBI is very keen that consumption growth and personal loans should be a little bit more moderate. So I think all the fintechs will focus a bit more on the whole priority sector lending, which would be affordable housing, MSMEs, agri, or green energy.
Absolutely. And as fintech as a sector is emerging as an important stakeholder in providing financial services, do
Right.
you expect any kind of measures in the budget that could boost suitable incentives for the industry? What is your overall growth projections for this year for the sector?
So I'm not sure specifically if anything will come for fintech. Like I haven't seen it before, so not keeping my hopes high on that front. But yes, I do hope that for the NBFC sector in general, that there should be more avenues opening up to raise debt. I think RBI wants to reduce the amount of liquidity from banks towards NBFC. So hopefully through the bond market is something that I would expect that
Right.
the government will try to facilitate more on corporate bonds, on other forms of borrowing, which is more directly from the investor to the NBFCs. And that should help the sector with better liquidity. And then coming to your growth, I mean, the question about growth projections. So, we expect the Indian economy to grow at 7% in real terms. If you add inflation of say 5-6%, that would be at least 12-13% growth for the economy. And I would expect the fintech sector to at least grow double that. So probably 25% growth is at the minimum what I would expect for the fintech sector.
Right. Now, Mr. Damani, you spoke about your expectations for the growth rate is 7%, 5 to 6, moderately, slightly high
Inflation.
inflation. But if you look around the world, then most of the developed nations are actually facing higher inflation. Although most central bankers
Right.
said that inflation would be transitory for a long time, US faced it, and the Fed had to raise its interest rate much higher. um, we could say that India is in a much better position as of now. However, do you expect inflation is has slightly cooled off, but do you expect it to go up again later in the year, depending probably on monsoon, etc. And if the RBI keeps repo rate at 6.5%, it will probably have an impact on personal loan interest also, right? So,
Hmm.
what are your thoughts on that?
I think the government has done a great job of managing inflation in India and in terms of just overall increasing the supply of things. So, because of having good growth in the economy and good growth on the manufacturing production, so the prices haven't been rising as fast in India as compared to the global economies. So I think it should hopefully stay around here anywhere 5 to 7% range, is the level of inflation I would expect. Of course, food inflation is hard to predict, but apart from that, I think we should be in a stable inflation environment. Even oil prices have been quite stable, and there is more talk of, let's say the Israel-Palestinian war kind of ending as compared to the chances of things escalating further. So I do feel inflation should hopefully remain in control, and with that, RBI will probably also hopefully just maintain rates and hope towards a second half there could even be a chance of reduction of rates is what I feel.
Right.
Even in the US, there has been a lot of inflation, but still there is now expectation of a cut in rates in the next, like within the next 1 year.
Right, right. That was my follow-up question actually. That we have just opened our RBI poll, and economists and analysts across India are saying that
Right.
probably next month RBI is going to keep repo rate unchanged, and
Hmm.
later this year there could be a rate cut. So I'm assuming that you have the same stance.
I agree. I think next meeting should be a hold. We cannot expect much changes. And
Right.
it might be maybe at least 6 to 9 months before any rate cuts start happening.
What do you believe that the NBFC sector needs for better growth and better credit cycle?
For the most part, now it's just about more affordable cost of funds. There is a bit of margin pressure because rates have gone up and liquidity is also moving a bit tighter. So I think having that balance where even if cost is a little high, but a bit more easily available liquidity would be good for the NBFC sector. And secondly, I think it's about just overhauling the debt markets, I would say. So, the
Right.
equity market has a lot of incentives. People get a lot of tax benefits on investing in equities. But no country has become a superpower without having a very deep and liquid debt market. So I think that would be great if the government can encourage more of a debt market in India. And usually debt markets are double or triple the size of the equity market, actually. So whereas in our case, we're probably half the size. So
Sure.
apart from government bonds, there should be like a much bigger, much wider traded uh, corporate and even high yield and NBFC debt market. And I think, yeah, that would be great for boosting the sector.
Sure. I have a few last questions, Mr.
Yeah.
Damani, and I have an interesting question actually, which was sent by our senior sub editor Pooja Jaiswal, who follows Credit Fair very very closely. So
Okay.
she's asked that in recent times, Credit Fair has collaborated with energy and solar companies to provide
Right.
solar financing and solar rooftops. So, what do you think about Pradhan Mantri Solar Panel Yojana 2024, and how will it drive India? Does Credit Fair has any opportunity to probably benefit from this? And your overall thoughts on this.
Okay. Yeah, thanks, Ms. Pooja, for following us. And the focus for us has been a lot more on green energy over the last year or two. We see this as a very unique opportunity because the awareness is increasing a lot about solar as well as about saving the environment. The number of people who can do these installations and the number of qualified manufacturers is growing tremendously. And finally, for finance, there's people like us coming in to make the whole process easier, to make it more affordable and accessible. So yeah, we think that this is a great way that ultimately it's about make in India. So, but why not just make power at your home and cut your electricity bill? So we've been able to help over 2,000 borrowers already, 2,000 customers rather, I should say. And this has been almost, like over 11 megawatts of power that is being generated thanks to the funding we provided. It's just a start. We're helping customers save over 1 crore monthly in electricity bills. So we think this is a great opportunity for a company like Credit Fair, where we can help the environment, we can help the borrowers with reducing their financial liabilities and ultimately be able to serve many pockets of the country.
Sure.
Like we are looking to serve at least solar in 10 states currently and hopefully expand that over time.
Are you focusing on more of rural area for this, or is it the urban area that you're targeting?
Right now, it's more of the tier two, tier three cities. So
Right.
we're not targeting like the metros, whether Bombay, Delhi, etc. Because typically this would be someone who has a standalone home and or a small factory or a school or a hospital. Those
Right.
are the typical target consumers for us. And usually a bungalow or a small house would be more in, let's say, a Nasik or a Indore or a Jaipur. So we're going more after the tier two, tier three cities. And over the next 1, 2 years, we would also like to go more rural. So we have done, loans in as small parts of like a village near Varanasi or Lucknow. There's a place called Lakhimpur, for example. So we do want to get to that last mile, but right now our focus is a lot more onto the tier three cities.
Right. So I think that's a very noble cause too, because more in, especially in villages and in smaller towns where agriculture is the main way of earning. I think
Yes.
solar power can help a lot. So
Yes.
thank you for that.
Yeah.
Just one last question. I heard you spoke about stock market, and there are so many sometimes external factors also impacting the stock market, even if, like, for example, the war between
Mhm.
Russia and Ukraine, or Israel and Palestine, or the risks from China, probably China's real estate
Right.
sector impacting the Indian stock market. But then we have the Lok Sabha elections. So, any
Mhm.
thoughts, any expectations on how the stock market will perform this year?
Uh, Yes, I think it's very difficult to predict the stock market where it goes. I can just talk about the broad direction. I think broad
Sure.
direction, everything is positive. Like India is uniquely positioned because, like you said, China is having its own crisis. So everyone is looking for an alternative, whether abroad or in India, where they can put their money in. And I think the best part is now the domestic money is actually a bigger factor than the foreign money. So I think that just makes it less likely for the stock market to go down because there's so much savings, so many investors looking to deploy their funds, and everyone feels very comfortable with the stock market. So I would say broadly the direction is up. I do feel the valuations might be quite high in many stocks. So it is going to be probably very selective stocks might go up, but yeah, I think the trend is up, and probably at the end of the year also we should go there. I think the Lok Sabha part, maybe it's factored in because after the assembly elections, now everyone is expecting the current government to continue. So it's more like if there's an upset in the elections, then the stock market might go down. Otherwise, things should be stable to high.
Thank you so much, Mr. Damani, for joining us.
Thanks for having me on the show.
That was Mr. Aditya Damani, CEO of Credit Fair, talking to us with Good Returns.